I would say if you polled 100 Canadians, there's probably at least non-immigrants even. There's at least 15% of people that are behind in their taxes. So I don't think it's necessarily, I think it's a good headline, I think, for the article.
Yes.
But I would guess that there's probably, I mean, I know all the time we talk to clients and, self-employed or whomever, and just like, oh, I haven't filed for, 2022 or 23 yet. You're like, okay, we got to do that before we get down this road too far, right?
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Welcome to the Ottawa Real Estate Podcast, your go-to source for all things housing in the vibrant capital city. Join us as we explore the latest trends, expert insights, and insider tips to navigate the dynamic Ottawa real estate market. Whether you're a buyer, a seller, or just curious about the local market, we've got you covered. Let's dive into the world of Ottawa real estate together. My name is Paul Stevenson. I'm a mortgage agent, level 2, and I'm joined as always by David Warren, mortgage agent, level 2, and Greg Campbell, realtor. I can say that now, right? Realtor, no longer sales representative.
I'll just be in this dark room combing my beard.
Greg's got the new studio set up, or being set up, in the midst of being set up.
In the midst, yeah.
Greg's
Paul, I feel like now that we're so close together here now, Paul, we may have to start wearing headphones daily. I can hear the delay in the other room.
Yeah, we're just saying the bass from David's voice just rumbles the walls here.
Yeah.
How was the weekend? How you guys doing? How's Monday?
Monday's great. I've been up since 4:30 doing my Monday morning things. Happy to be in the new space. As you can see, it's been painted. Well, you never saw it before, so you wouldn't know it was another color, but I'm excited to get this space going at the new space, at the new office. This space within the space. Weekend was good. A lot of stuff with the kids, did some showings, showed a property out in the country that was very, very unique, very eclectic, I would say. And I wasn't sure if it was going to get multiple offers, but it did. It was listed at $1 million. Got multiple offers. 3. Not a firm sale yet, though, but we'll see.
Where in the country?
It was in, oh my goodness, just outside of...
I'm going to guess Limoges.
Osgood.
Okay.
It was in Osgood, yeah. And then I showed some other condos at Tarrant Road, 960 Tarrant. A lot of people are familiar with that building. Good spot for seniors and people who just need some more amenities, easy accessibility. Great location.
I'm going to throw you a curveball here, Greg, to start the show, just for fun. We were talking about stats over the last couple of weeks. I actually bumped into Mr. Kevin Morris, this morning at the gym, and told him, he said he loved the shout out from Mr. Crouch. Numbers guy, real numbers guy. We were crunching numbers.
He's a numbers guy. Kevin's a numbers guy.
He's a numbers guy. So, Greg, stats, listings. How are we looking? We don't need specifics, but how are we seeing more listings coming out now? That was our anticipation. I know last week when you mentioned it was 300 something.
It's pretty much the same. Like the last 7 days, we've got 334 new listings, 26 conditional sales, 167 sold in the last 7 days. It's almost exactly the same as it was the previous 7 days. So we're on a good trajectory here. I think that's going to increase in the coming weeks. I find that weather changes people's perspective a lot of the time, but we'll see where that goes. But bunch of listings canceled, 98 listings canceled. How many of those were relisted? Probably most of them. 15 expired, same scenario. They probably all relisted at same price or either a lower price. 87 rentals, and this is Greater Ottawa again. This will be my new format. Based on what Nick said, I think it's fair that we just kind of do a Greater Ottawa average stats. 79 price decreases in the last 7 days, so that's positive for buyers. Yeah, we'll see where we go from here. It's been busy. I think what have I done since last weekend? Oh yeah, I actually did two transactions over the weekend. I forget. I do things. I have family life. I give out information. I speak with people. I trade in real estate. I had a firm sale on a townhome in Orleans on Friday, and conditionally sold a property off market, people. we were going to go to market, and then I mentioned it to a few agents. One went through, client loved it. Offer conditional until Friday. So next week I'll be talking to you about that one. But it was a good deal. The house was an estate sale. Great client of mine, and they went in and did a bunch of renos. Place looks great, and now it's conditionally sold off market. So remember that, buyers, when you're out there, that if you are working with a realtor, ask if they have any off market properties coming up in the area that you're looking in. And if they don't, ask them if they are associated with any groups or networks that offer exclusive listings, off market properties. I am a part of those groups. Many agents are not. So just something to be aware of. If you think that you're stuck and whoever you're working with can't answer that question, saying that they do have access, maybe you should look around a bit, because there are opportunities out there.
Do you find when you're listing a property, do you suggest that to sellers before actually publicly listing it?
Depends on what it is. Sometimes we would, because what happens is if you offer it off market prior to MLS, it's kind of agreed to that the price will be the price. You know what I mean? If you're giving someone exclusive access to a property before it goes public, then they're going to pay the price if they want it. If you go on MLS, then you may get full price, you may get less. As we know, I think the average, what was it, list price to sales price, I think it was 93.8% last time I looked, or something for December. I'm sure that'll be changed substantially for January. But in this case, we were just going to go on MLS, but we wanted to wait another week as the market was picking up. And then a couple agents, they're like, yeah, you said you had that listing. And I'm like, yeah, I got it. And they went in and saw it, and that was that. So it wasn't even really planned. It just kind of happened.
Great.
Yeah, I think it's a good story.
From a market picking up, I truly still believe that. I think last week was probably my busiest week in over a year.
Wow, in over a year.
Yeah. From purchases to transfers to refinances, pre-approvals of people like that are buyers, like ready to get back to the fold. And yeah, it was really interesting to see that it was kind of a mix of everyone. So, there's the numbers out there of over 1 million people, mortgages coming up for renewal. So there was a number of those, but also purchases, all conditional with whether it be, new builds, they purchased a new build condition of financing or resale condition of financing as well. But yeah, I found that really interesting. And the pre-approvals more so, a lot of first time home buyers that are just saying we're buying they're out shopping now and looking to buy before the spring. And I think there was probably last week 5 or 8 groups of first time home buyers like that were just like, yep, we spent the year saving, rates come down, time to go. So
nice.
Yeah, I think could have been coincidental as well with the Bank of Canada finally, kind of having their announcement to start the year on the 24th last Wednesday. Again, like kind of speaking to the fact that they're holding on rates, that they started talking about more about when the rate cuts will come and start this year, which again, like we've talked about before, kind of breeds that confidence level in buyers as well of, what to expect from the market when they kind of hear from the Bank of Canada that, they're not going to be raising rates and they're actually going the opposite direction. I think, really does influence dramatically.
Yeah, we've seen, I know last week we talked about more people asking about variable rates, and that's still certainly happening. Fixed rates, as we've seen, I know, Stephen, I think you have the chart for the Canada 5-year government bonds. So I pulled a 6-month kind of trajectory of the chart just so everyone can kind of see where it's heading. So we saw a pretty dramatic decrease from mid-October till roughly mid-January. And then it's been a little sticky, I think, since the US kind of made their announcement around that time. We've seen the rates kind of hike up, or at least the bond rate hike up slightly. Most lenders are kind of still sitting in that low 5 range, kind of the 509 to 529. There's still a few that you can get under 5, but it's, a lot of them ticked back over 5 when we saw this kind of blip in the rates. So it'll be interesting to see where that also trends over the next month. We'll kind of track this maybe week to week as well, so people kind of know where, like, obviously rates are front and center for most people, especially in a decreasing rate environment. Everyone wants to be, the first to get the low rate and tell their friends about it and so on. So certainly worth keeping an eye on. And as you said, Dave, like it's almost guaranteed that if there's any sort of positive announcement about rates, that we're going to see an uptick in transactions and conversations and in interest,
Yeah, we're, Phil Soper from Royal LePage just had an interview with the Financial Post saying that, they're estimating a 5% increase this year. Which is what Paul and Dave said 3 weeks ago, isn't it? It was 5%. I said no percent.
I thought you were talking about bond rates. I was going to say, holy shit, 5% increase.
No.
Okay.
Sorry, in sales.
Yes.
Yeah.
I like that number much better.
Yeah. But this is the thing, like you said, the media is starting to talk about it more, which is funny because what does that do? It just triggers people to act, right? Mm-hmm. Don't listen to TOREP or what we say. Wait till the news tells you to do it. And
it becomes a balancing act, right? Of the, and I think it'll be interesting as any rate cut comes, of how quickly they do it or how the market really does react. Because, if it becomes a flood of buyers and kind of housing spikes, then do they hold longer? Do they continue? I mean, the Canadian GDP contracted last year, even though we grew the population at 3.2% and was one of the fastest in the world from a growth perspective. But, through the latter half of the year, we were a negative GDP or a flat line at zero. So obviously they need to spurn, investment within the country and growing that and a growth within the economy. But if they start dropping too quickly, how does that impact things? So I think that'll be kind of the interesting thing to watch, but time will tell. I still think that we're going to, as I said a few weeks ago, I think it'll be the same number of transactions as kind of the average typical year. And we'll have that growth. They won't be able to keep rate, prime where it is. They're going to have to drop it. Just a matter of how quickly.
How quickly do they do it? What else do we have, boys? What else do we have here? What's going on? What do you have, Paul? What do you have for us?
Well, no, you're asking what we had, and then I feel like you were just about to get into something you had.
I was going to get into something, and then I thought you were going to say something. Should I say something?
Let me touch on this quickly, and then you can touch on whatever you'd like to touch on. So this is an article that I saw this morning, Canadian Mortgage Trends. So I was actually talking about, we talked about first-time home buyers, household debt, etc. This is talking about under 35. So households of people aged under 35 lead the way in reducing mortgage debt. This was from Stats Canada. So I'll read this. It's probably a 1-minute read, but I think there's a lot of valuable info in here. So it says, Canada's youngest demographic of homeowners is the only group to have reduced their mortgage debt since rates started rising in 2022. New data from Statistics Canada found that households where the major income earner is 35 or younger reduced their overall mortgage debt by 5%. All other age groups of households, meanwhile, saw their mortgage debt grow by an average of 1.3 from the third quarter of 2022 to Q3 of 2023. StatsCan says there's various reasons why households in the youngest age group may be reducing their mortgage balances. It says prospective homeowners may be turning away from the housing market due to affordability concerns, while existing homeowners who purchased a home when interest rates were much lower a few years ago may be paying off their existing mortgage debt balances or moving into more affordable accommodations. So that makes sense. Obviously, people at a lower interest rate, they have that additional cash flow where others don't, and they're applying that to the principal balance. It says debt to income ratios also fall for youngest demographics. The data also found the country's youngest households saw their debt to income ratios decline, although their debt service ratios increase year over year. The under 35 age group saw their average debt to income ratio fall to 165% in Q3 2023, down 10 percentage points compared to the previous year. And then last, I'll just get into this last point. It says overall household credit continues to grow, although the rate has slowed considerably since the Bank of Canada started hiking rates in early 2022. Total liabilities for households increased by $7.4 billion in November, up 0.3 month over month to total $2.9 trillion, Stats Canada said. Mortgage debt rose by $5.4 billion in November, up 0.3 from October. That says persistently high interest rates and inflation are likely to continue to strain households' ability to make ends meet without going further into debt, especially vulnerable groups. So,
Wow.
yeah, interesting stats. Like obviously a lot of numbers there. Sorry to throw billions and percentages and point this, point that. But I mean, if you listen to that again, maybe there is some really valuable data in there. I think it does make sense. Obviously, anyone who may have been a first-time home buyer, say 3 years ago, they locked in at their 2 point whatever percent, and they have that additional cash now that they can apply to the principal balance, especially knowing that others are in higher interest rates, or maybe the fear of renewing in a higher interest rate has prompted them to make larger debt repayment payments because they want to avoid future interest applied to the mortgage. But I thought it was very interesting to see that, because you would think usually the younger demographics are, at least the perception is that they might be more reckless or they're spending money on other things, trips and so on. Seems to be not the case. Future is looking bright.
Yeah, I think just overall, like the younger generations are getting way smarter than we were or are, and that's just going to continue finally, but now they're left with all this shit to deal with that they're going to have to help regulate in some way in terms of from a federal, national, international level.
I think the interesting stat in there was that the under 35 has decreased their debt to income ratio by 10%, or 10 points, which is, consumer debt being originally 175% of what their income is, to reducing it to 165 is pretty huge, considering, that debt is typically 20%, 13%. It's the unsecured lines of credit, the credit cards. So being that they've been able to reduce that is pretty substantial, especially considering the stats out there are that the default rate on consumer debt category of 90-day plus delinquencies on credit cards. I was on a presentation on Friday and they were talking about the increase there from Q3 of 2022. The 90 plus delinquency rate was 3.69%. And in Q3 of 2023, that jumped to 5.78%. And it's been steadily going up for that, missing payments by 90 plus days. So obviously that's the 35 plus mark, being that the under 35 age group has been reducing their debt. It kind of seems like.
Speaking of taxes, no one said anything about taxes, but Greg.
Great segue.
So taxes? Yeah. Anyways, Greg, you were saying you found a great article this morning from Better Dwelling. Maybe you want to touch on that about.
Yeah, it's just an interesting article talking about taxes and people not paying taxes. Immigrants fewer are filing taxes. So here's a quick little summary. Canada's been trying to boost its tax base through immigration, but many immigrants have stopped filing taxes, raising concerns. Stats Canada data shows a significant decline in tax filings among immigrants who arrived in 2019 and 2017. So then the question is, did they just leave? The retention rate of tax filers among recent immigrants has dropped sharply, going from 91% to 85.5% in just 3 years. The trend is not solely related to the pandemic, as even immigrants admitted in 2011 saw a decline, 92.7 to 85% over several years. Historical data shows that 2007, Canada had a much higher tax filer retention rate, further highlighting the recent decline. The decline in tax filers may indicate that some recent immigrants may have left Canada, possibly due to rising shelters costs. So that's basically where we're headed. So the question is, I don't really need to get into it too much more, but that's the point. Where does it go from here? Are there, based on the other things that we're hearing, are there more people not filing taxes and just leaving? Is that part of the reason that they're leaving? Is it because of taxes, housing, taxes? They're just like, I'm out of here. So I think it's important to note that we're seeing that. And obviously it's not just immigrants. I'm sure it's Canadians as well. But that goes into, my recent conversations with people about CRA being more, what's the word I'm looking for? They're trying to better serve and request funds from people who are behind in taxes, as opposed to trying to strong arm them. From conversations I've had with people who are in arrears, you can make a deal, and if you have an exorbitant amount of tax debt, they'll take whatever they can because I think there's a big concern in Canada right now of being able to pay back anything. And people are just kind of starting to say, we're taxed enough. We can't live without some of this extra money, depending on what your career is, right? I mean, a lot of this goes down to entrepreneurs, business owners and stuff. If you're working for the government or certain general employment, you're paying taxes off your checks. It becomes the ones that you don't do that the government will come to collect if you don't pay it. What do you guys think of that?
I don't know about you guys, but I think we could use a few more taxes. I think.
How about a TOREP tax?
Yeah,
TOREP tax.
Yeah, we need a TOREP tax. That'd be amazing. Yeah, no, I think to that point, like I think you said it went down to 85%. I mean, I would say if you polled 100 Canadians, there's probably at least non-immigrants even. There's at least 15% of people that are behind in their taxes. So I don't think it's necessarily. I think it's a good headline, I think, for the article.
Yes. But
I would guess that there's probably, I know all the time we talk to clients and, self-employed or whomever, and just like, oh, I haven't filed for, 2022 or 23 yet. Like, okay, well, we got to do that before we get down this road too far, right? Greg, we had some clients that had just recently immigrated to Canada, and, I was speaking to a lender and they said, well, if Greg is able to file or at least claim income in Canada, that also changes the file. So there's a lot of these things too, like people that are new to Canada, if they haven't filed taxes here, it does make it a little more challenging from a qualifying standpoint for us. So that does help strengthen their file. So, there's a lot of reasons why people did or have or haven't filed taxes. But I think that number, it makes for a good headline. It's shocking, but I would imagine that it's probably fairly comparable to permanent residents and citizens.
The general population.
I agree. And that's the thing. That's what I was saying there in the end. But it's just the connection of the headlines of immigrants leaving. And then this line comes out, fewer filing taxes. So then it's like this big, oh, that's why they're leaving.
Yeah.
Right.
So hold on. I'm getting taxed on the money I make. And then I'm paying tax on the stuff I buy. And then I'm paying tax at the end of the year for the stuff I invest in and buy. Yeah.
I think that the missing gap, and I know, Greg, you mentioned it before, is that, it doesn't seem like StatsCan actually monitors or keeps track of people that have become permanent residents or immigrated here, but have left. And I think even in that article, it even mentions that there's no way that that's tracked or an easy way of tracking it. Because some people might have got their permanent residency or came here and just left, but they never actually notified anybody. They just said, the heck with this, it's not what I was expecting, or it's too costly to live, or whatever it may be, and decided to move back home or move elsewhere. But doesn't seem to be any sort of metric with regards to that, which
I want to digress back into this for a second. I jumped the gun by stopping these last final points of this summary that I have here, because they're actually very relevant to what we're talking about. A survey of recent immigrants revealed that many regretted moving to Canada due to housing costs and were considering moving back or elsewhere. There's a possibility that Canada does not fully understand who has left the country, as some people may not have notified the tax agency of their departure. Various reasons could explain why immigrants do not notify the government of their departure, including lack of awareness, residency security, or avoiding departure taxes. The impact of these immigrants not filing taxes and potentially leaving Canada has implications for housing demand and the economy. So that basically summarized what we were just talking about. I guess I should have finished that. Thanks, Greg.
Well,
Paul's gone. Your mic's gone, Paul.
He gone.
He gone. Fucking gone. Oh, man. So there you have it. So the government's aware, or in this summary, they're aware, and that's those are very valid points, which we also just shared without even reading that.
But I think that it all comes full circle for sure, not just with taxes, but what revenue the government has for spending. Is there the proper allocation of funds for services for, these new immigrants, or even, and then for shelter, what is, and I know you've mentioned it before, Greg, but what is the true number of homes that we have a shortfall of? Obviously, we go based on what our recorded population is, but there isn't, if we're not tracking that reduction as well, like what is that shortfall in actuality? It's probably, it's pretty hard to track. And I really don't blame those that come and, don't notify to leave, because if you're leaving and you're not come back, why the heck would you even bother going through it?
Hello.
But hey, there you are.
Hey, there's Paul.
Sorry, I was caught off guard. You're saying there's a departure tax? So you're taxed?
I saw that. Yeah. So that's what it says. Departure taxes. What's a departure tax?
I'm guessing CRA just collecting
Canada, immigrants. Departure tax. Here we go. When you leave. Oh wait. Oh, no. No. When you leave Canada to settle in another country, you become a non-resident of Canada for income tax purposes on the latest. The date you leave Canada.
It's to settle your Canadian sourced income.
Right.
So paying basically just
anything that you owe.
Settling up any CRA like owing.
I thought it was a deterrent to not leave. Like, yeah, you can come, but there's a departure tax of $100,000.
Oh, right.
Like,
you have to pay it on the way out. No.
Yeah.
You can go, you just can't come back in.
Yeah, that would be
I actually had a friend a long time ago who left, and he had a heavy six-figure tax debt. And there was this caveat, like he went through a ton of shit to get back into Canada 3 years later. He had to he didn't have all the funds to do it. He had a lot of it because he'd earned overseas, but he had to make an arrangement that he was paying a lump sum up front, and that he was established in employment that he'd be able to pay it back after.
Let me guess. Yeah. He got taxed on the amount owing.
He got taxed.
Yes.
Yeah. He got taxed.
That's going to be the name of my fourth child. Tax Stevenson. Jackson taxed.
So what's up with the we got a couple of things here. What's up with the chapters, the Byward Market picking up some steam there with a new space?
Yes.
Supposedly, so it's supposedly been there's in the Ottawa Business Journal, they talked about it being taken over by or being bought by the NCC, but my inside sources tell me that it's Live Nation that actually signed a 15-20 year lease on that facility to make it a event and music space, which I think will be fantastic for that corner, for the businesses around there. Mm-hmm. Another alternative, obviously, downtown, there's like the Bronson Center, which is a smaller space and things like that. But I think having a really, fresh and new event space for small bands, for, bringing artists in, I think will be fantastic for the core.
It'll be great for right downtown, because there hasn't been anything like that for a while. There was a place on Rideau. York Street Entertainment owned it. I can't even remember what it was called, but they used to have some pretty decent shows in there. This is interesting because I was literally driving down Sussex the other day, looking at that building going, wow, that'd make a great event place. And then all of a sudden, I was literally 2 weeks ago, maybe. I was like, what a great piece of real estate. It's prime for entertainment. And then all of a sudden this pops up. I'm like, wow. Yeah.
I think it's 60,000 square feet is the space. So it'll be a pretty good size. Obviously, if Live Nation's taking it over, they're going to invest quite a bit of money to fit up. So it should be pretty state of the art from a sound quality perspective and all that, which I think will be great for just different bands and tourism and bringing people in. It will really help to revitalize that area.
Greg, you're not talking about RJ's Boom Boom Saloon, are you?
Yeah, I think it originally was RJ's, maybe.
Capital City Music Hall was there.
City Music, yes. Yes.
Yeah. And then I think at one point during the transition, was that Liquor Dome? Was that there?
No, I don't think that was Liquor Dome.
There was another event space on that corner, because I remember going to a few concerts there when it was in its transitory phase. But yeah, no, I think it's a great idea. And as we grow as a city, I think we need more places like that. Ottawa's kind of missing that energy downtown. You go and it kind of, we were down there a couple of weeks ago. It kind of becomes a ghost town come midnight, even in the main market. Sandra obviously being from Medellin in Colombia and being a major city, like we drive down Elgin Street on Friday night at 7 p.m. and she's blown away. Like this is downtown, the capital. It's a little surprising. So it'd be nice to have some other event spaces where people can kind of congregate and have some good times.
Yeah,
good memories,
I think it's great. I think it's great for.
We need big stuff opening for the Hornets in there. That should be the opening.
Oh my God, we're going back. Yeah.
Mood boost, gentlemen. What do you think?
Mood boosts.
Let's do it.
Yeah.
It's about that time. I got 3 today, and you guys let me know what you think. Number 1, I once had a cross-eyed teacher. He couldn't control his pupils. Tough
I
time.
like it. I like it.
Number 2, if prisoners could take their own mugshots, they'd be called selfies. Yeah, no?
Selfies. Yeah.
Mhm.
And last but not least, my wife left me because of my obsession with pasta. I'm feeling cannelloni right now. Pasta jokes
Okay.
never get old. You can't get a pasta joke past me,
These,
you know?
these jokes never end. Like, who sits and writes these jokes?
People like Paul. People like Paul.
Next week, we're going to delve into the history of dad jokes and mood boosts.
Oh, I got to do you delve. I got to do you delve this weekend, actually, from somebody.
Oh, did you? You got one. Nice.
Yeah. It was
I'm
pretty
back.
hilarious. I was out at Lucky Ron actually at the Lafayette on Saturday afternoon, and I got it from somebody at Do You Delve.
You did?
Yeah.
Yeah.
Wow.
It's
Well, I
happening.
froze for a few seconds there, so I didn't hear any of that. But someone asked you if you delve while you're out?
Yeah.
When I was
Wow.
at the Lucky Ron show at the Lafayette.
Incredible.
It's amazing.
Lucky Ron and TOREP. I mean, they're synonymous.
They go hand in hand.
All right. Thank you, everyone, for tuning in. We will be back next week, Tuesdays, 10 a.m., new episodes. Check us out on our socials. We got a lot of shorts on there now, short reels, nice and consumable. Okay. So, yeah, check us out on Instagram, TikTok, YouTube, Facebook. We're there. We love you. Thanks for listening. We'll be back. Have a great week.
That was really nice, Paul.
Bye,
That was
everyone.
really great. Bye.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.